Hope everyone is doing well. This is going to be a video over June the 21st. And give me 2 seconds here. So coming into the day, we had a big gap up. I mean, not big, but big enough gap to pay attention to it. And let me talk about the day as a whole. So gap up, and then we went sideways for the rest of the day. It's very common when you get a trend from the open, which this was, that there's a 60% chance that any trend from the open is going to lead to a trading range. 20% chance you're going to get a trend from the open that just lasts all day, similar to, and you can see they're not very common. Here's one of those surprise days where we just kept going down. 20% chance this happens. Most trend from the opens, you get a bear trend from the open, turned into a trading range, but led to a rally. Bull trend from the open, trading range. Trend from the open, but really more of an opening reversal. So, anyways. On the open, when you gap up, 80% chance you're going to go sideways and form some sort of trading range open. 20% chance you get a trend from the open. When you do get a gap up, the odds increase that you'll get a trend from the open. And if you're going to get a trend, it somewhat favors in the direction of the gap. So if it's gap up, the odds favor a bull trend slightly more than a bear trend. But again, most of the time, expect sideways. So on bar one, it's a reasonable buy above bar one. I'll do it like this. Reasonable buy above bar one. Follow through bar two. Might be the low of the day. Strong enough breakout, probably at least second leg up, but far away from the moving average. It is always in long, so traders will buy. They'll buy above this bar. They'll buy this close. They'll buy a 50% pullback. 50% chance, give or take, that this first reversal, that this move up will fail and you'll get a major reversal down. 3 consecutive bull bars, probably buyers below this low for at least second leg up. High one buy, but strong enough breakout, make it a second leg. Breakout, follow through. Might form a parabolic wedge, 1, pullback 2, pullback 3, but so far, difficult for bears to make money. Better to be looking to buy. Two-legged pullback, but again, it's a micro channel except for this bar, so pretty good buying pressure. Probably sideways is the best the bears can expect. Retesting this high close, may find disappointed buyers up here. So bulls bought, scaled in, disappointed. Bears trying to get a second entry short, but probably buyers below this low, scaling in lower, and did not even trigger, broke to the upside. 3 pushes up, 1, 2, 3, so again, possible parabolic wedge, possible final flag, and bulls probably going to be disappointed up here. The bulls were disappointed in this area, so the bulls got a breakout and they were disappointed. We have a gap that's open, so you do have to consider there's 2 targets. There's this target, and then there's a target in the measuring gap. We may go a little bit higher, but we also may go sideways first. And those bulls clearly were disappointed. Another bull bar, but again, doji, 3 pushes up, 1, 2, 3. Possible start to a trading range. Probably, we know there's a 99% chance we're going to test the moving average, so probably going to go sideways soon. You can call it a second entry short or a breakout pullback of this wedge top from here. It's not a great short below, but traders are shorting up here using wide stops, betting that the market sells off for at least a few bars and goes sideways. They're not expecting a bear trend though. They're expecting a trading range. Consecutive bull bars, but the bodies are getting smaller. So again, wedge 1, 2, 3, 1, 2, 3, 1, 2, 3. So again, this looks like a leg in a trading range. The bulls are trying to get a gap. We've tested this target. Next target is the breakout point, which is here. May have to get up to it before we sell off, but this looks like a leg in a trading range, not a strong trend. And 60% of the time on a trend from the open, the market will go sideways. So there you go. High one buy, but didn't trigger. Second entry short. Bear breakout. Doji. Again, the bears may get 2 legs down because of the wedge top. So second entry buy. Did not touch the moving average. Tight channel. May get a second leg down. Outside down bar. Bad follow through. Probably going to start to go sideways soon. The bears hope this is a measuring gap, and the market will have a measured move. It's possible, but leg in a trading range, leg in a trading range. This is probably pretty close to the bottom, and we've had a sell climax pause, another sell climax, probably going to pause. Might go a little bit lower, but probably going to fail soon. Bears who sold this close, it's a strong enough surprise, probably a second leg down, but they're going to be fairly disappointed with this bar, and they need follow through. Bears are not going to want to hold short at the moving average without some form of urgency. Too much risk that the market's going to stall and we're going to start going sideways. Doji, big bear bar. Possible measuring gap. But again, the bears have a doji. They have a big bear bar. They need a breakout or else the bears are going to start giving up. Follow through bar, but again, a lot of overlap. Sideways, a little bit lower. Reached the measured move target from here, found buyers. And the pullback. This was not enough to make the market always in short. It was just enough to confirm a trading range. So if you think about it, the odds are there's a greater risk the market's going to go sideways because you had a rally. The bulls are going to be disappointed up here. They're going to buy more lower. 50% is going to be somewhere in this area. This looks like a leg in a trading range. This looked like a leg in a trading range. This looked like a leg in a trading range. Legs in trading ranges usually disappoint swing traders. So I don't think we're going to get a new high. I think we're going to get a lower high. The lower it might be, we might go above this bar and then sell off. Maybe we go a little bit higher, sell off, but I think we're going sideways. So possible breakout, measuring gap, but again, the bulls are probably going to be disappointed soon. Gap closed, strong bull bar, and then again, bad follow through, 3 pushes, 1, 2, 3. This looks like a leg in a trading range, and I don't want to be buying high in what could be a leg in a trading range. I want to be selling up there, but this channel is also tight. 3 consecutive bear bars, possible lower high, so you have to wonder if that is the start of a lower high. The bears hope that the market's going to do something like this. More likely we're going to get a higher low. Maybe this is the start of a channel, which means that this might be the channel or the triangle now. The bears want this, but I don't think that's likely. Starting to go sideways. Bear bar, but again, not touching the bottom of the channel. There will be some bulls that'll buy, but they'll probably either, if they buy this bar, they'll stop themselves out and then buy a larger position lower, or they'll use a wide stop somewhere down here and buy more lower. And that was those bulls they bought. They bought more below this bar, got out break even. So now, bear bar closing below the moving average. It's an okay short, but again, it's not great. It's a trading range below the moving average on what's been a bull trend day. Probably going to be find buyers somewhere down here. Starting to go sideways in a tight trading range. Bulls trying to break to the upside, but again, not ideal. It's a tight trading range. Big bear bar, but within a tight trading range, so very dangerous to be buying with stops. Another big bull bar, so the bulls breakout, pullback, buy setup. We may get the upside breakout here. The odds slightly favor the bulls anyway because we had a gap up. So the odds slightly favor trend resumption, but not by much. Breakout bar, follow through. Again, not strong. Another big bull bar testing the highs up here. So while it is a breakout, it's possible. It's also a possible second leg trap. And while the follow through is good, it's fairly disappointing. Doji inside bar, probably sellers above a high 1, but it's tight channel. Most bulls want to buy a breakout. They don't want to necessarily buy. They don't want to buy this. They want to buy a stronger move up, which means bears may start selling soon. Bear bar, reminder that the market's in a trading range. Close this breakout point. Starting to go sideways. Second entry buy, but micro channel. Weak buy signal bar. Bears trying to get a bear breakout, but now we have a possible wedge. Let me zoom in. Now we have a possible wedge. Retested these highs, maybe it tested this close up here, and then a bear breakout into the close. So overall, it was a trading range day. If you get rid of these bars, it was just a trading range day. So traders are better off buying below bars and scaling in lower, selling above new highs, like here, selling this high, scaling in higher, 3 consecutive bear bars, selling, scalping out. And a trading range is frustrating because it disappoints swing traders. A swing trader, they wait for a breakout, and then they wait for follow through, but then it's too high in the range. If they buy, it's only a scalp. The scalper that buys as the market's going up, scalps out, has the opportunity to sell at a new high. If you're holding short, it's hard to stay short above this bar. Hard to stay short above that bar, so it's easy to sell, be disappointed, get out around break even, and then you think this channel down's too tight, so it's hard to buy. So again, the key thing on a day like today is to pay attention to buy and sell zones. At this point, this is probably going to be the low of the day, therefore buying somewhere around a 50% pullback is a reasonable idea. Bear breakout, moving average, it's okay to buy, but it's better to trade smaller and use a wide stop and look to buy more lower. So bulls can buy, but if they start to see signs of disappointment, better to scalp out and look for another buy setup. And I mean, really, if you just look at all the limit order trades, there's a ton of them. They're hard to take because most people can't trade small enough to be comfortable taking those trades, which is very important. And it's important to first pay attention to the buy and the sell zone. So when you think it's trading range, here's the prior leg. Maybe the prior leg started here. Look to buy somewhere in the bottom third. Bear leg. And the way I do that is I take a measured move projection and I have these defaulted down here, 33%, 66%. So when I turn it on, this is the top third of this bear leg. This is the bottom third. This is the middle. So I don't want to buy here. I don't want to sell down here. I want to sell ideally somewhere above this blue line, which would be a 66% correction or pullback of this move. So somewhere in here is where I want to sell. And the opposite for here is this bull leg. Here's the middle. I want to buy below the middle, maybe somewhere down in here. So it's a bull bar, but again, possible triangle. Not an ideal buy, just based on this buy zone in here. It's okay for betting on a triangle though. Down here though, you're getting close to the bottom third of this prior leg, so it's a reasonable area to buy. Hope this video helps.